All right, welcome back, everybody, guys. So, this is it. We are finally going to be reviewing every single concept that we learned in chapter 11. So, we got to take a look at 3 different types of depreciation methods, and we also got to take a look at amortization. So, today we're going to go ahead and exercise by completing this chapter 11 exercise. So, let's go ahead and review everything that we learned and dive right into each one. So question number 1 is going to be a units of production, obviously. So let's go ahead and see what the scenario is. Number 1, okay, you purchase a machine for $2,050, okay, with a $500 salvage value, okay? Its useful life is 7 years, and it can produce up to 25,000 units, okay? And you put this machine into service on June 12th. Use the the units of production method, right? So, as you can see, assuming that we're going to be doing our adjustments at the end of the year, let's go ahead and fill out our information. What did we buy?
Machine.
We bought a machine. Okay. What's the how much did it cost me?
2050.
2050. So how much is my salvage value?
500.
500. And then not lastly, what's the useful life on it?
7 years.
7 years. And how much can it produce?
25,000.
25,000. And lastly, when did we place this asset into service?
June 12.
June 12. So what does that tell us? When do we depreciate it?
June.
We start as of June. Okay. So now that we have here on my left panel over here, I have the total number of units that I produced that year. So let's go dive right into what first things first is. What is a depreciation basis? Sorry, excuse me. What's a depreciation basis?
1550.
1550. So it is going to be your asset cost minus your salvage value. 1550. Good. All right. What's my rate going to be?
0.89.
0.89. I did not get that. How did you solve for the cost per the rate?
So base is divided with the units produced, right?
Yes.
Yeah, okay.
Mine is 0.062.
Okay, let me go ahead and expand that so we know that it's actually not just 0.6, it's 0.062. Okay, good. So then how do we solve for the depreciation expense? I'm going to go ahead and equal round this just to ensure the accuracy of this.
Number produced times rate.
Good.
$127.10.
I did not get that.
I have seen 1085.
1085. How did you get 102, Nilo?
Depreciation expense, number of units produced that year, times rate.
How did you get 102 though? You were off by a lot. Did you round early?
No, not yet.
Okay. All right. So, okay. So 108.50 is what I got as well. Okay. So, what is going to be my accumulated depreciation for the first year?
108.50.
108.50. So, what does that leave my book value to be?
Book value was about
Multiply?
1941.50.
I believe we're going to subtract our accumulated depreciation, right? And we
yes,
got
total assets less
2050.
accumulated depreciation.
good. Good. All right. So that's for the first year of depreciation. However, how old is our asset right now?
Like 7 months.
It's right. We have to count for June, July, August, September, October, November, and December. It is 7 months old. So can we depreciate it for 850?
I'm going to say yes because it's based on the units produced rather than the time.
Absolutely. Oh, good job, Daniel. Yes. In this case, we don't care how old the asset is as long as it meets its capacity. So right now, for the first year, right, if you look very carefully, first year, second year, third year, fourth year, it barely reaches on average every year that you produce units, you're roughly supposed to make only 3,000 units. In this case, we're not even meeting half. So in this case, it is not time sensitive. So it doesn't matter. It doesn't matter when we place into service, as long as we are within capacity. So good. Trick question there, and you passed. All right. So year number 2. What is the depreciation basis going to be?
Same.
It's going to be the same. So now we know that this is going to be the same throughout. I can go ahead and safely apply it all the way down. What about my rate?
Same.
The rate is also going to be the same. So in this case, I can apply this all the way down. All right. So the only difference, or the only thing that we're actually is going to be changing, or that we're going to be constantly calculating, is going to be my depreciation expense, because I have a variable coming into play. Every year I'm producing a different number of units. So how much is my depreciation expense for year 2?
$217.
217. Oh, no, this times this right here, comma 2. Yes, 217 even. Good. All right. So then what does that mean? How much is going? I'm so sorry, I cannot talk today. How much is my accumulated depreciation for the second year?
325.5.
325.50, and that makes my book value to be
1724.
1724. Good. All right, same thing going down. What is going to be my depreciation expense for the third year?
235.60.
235.60. All right. What is going to be my accumulated depreciation for year 3?
561.10.
561.10. And then lastly, what is my book value for year 3?
1,488.90.
Yes. Good. All right. Next one down here, what is going to be my depreciation expense for year 4?
248.
248 even, bringing my accumulated depreciation to be
809.
819.
mm-hmm. And then lastly, what is going to be my book value?
1240.90.
1240.90. All right. All right. Continuing on, what is going to be my depreciation expense for year 5?
266.60.
260. Okay, good. And then my accumulated depreciation
107. 1,075.70.
1070.
75.70.
Good. Bringing my book value for year 5 to be
974.30.
974.30. Okay, good. All right, almost done here. What is my depreciation expense for year 5 or year 6, excuse me?
254.20.
254.20. Good. What's my total accumulated depreciation for year 6?
1,329.90.
Good. And lastly, what's my book value going to be as of year 6?
720.60.
Good. All right, let's continue one more year. So, what is my depreciation expense for year 7?
223.20.
223.20. And then what is my depreciation?
1,553.10.
Good. Accum depreciation. And lastly, what is my book value going to be?
496.90.
Okay, 496.90. Now, question to you. Can we be at 496.90 at the end of my 7th year?
No.
No, why?
Salvage value is 500.
It fell below salvage value. So that means I cannot use this 496. So what do I have to do? I need to mark them all as, I need to mark them all and reflect that I want to make 500. So therefore, I need to go ahead and work backwards. So if I know that it needs to be 500, right? How do I solve and work my way backwards? So my question is, if I know that I'm at $500, I need to be at 500 because I can't fall below the $500 threshold. So how do I solve for my accumulated depreciation? I have to work backwards now. What's my formula? Let's start with the formula. How do I solve for book value?
Cost of asset less accumulated depreciation.
Exactly. So if book value is equal to accum depreciation minus, oh no, sorry. What did you say? Cost, yeah, cost of asset
Less
minus accumulated.
depreciation.
Then we have book value. My book value is $500. Okay? And I have the cost of the asset. What is my cost of the asset?
2050.
2050. So if I have all that information and I need to solve for accumulated, so I'm going to use A for accumulated. How do I solve for A? How do I solve for A? How does 2050 minus X give you 500?
2050 minus 500.
Yes. So what is going to be my accumulated depreciation here?
1550.
1550. So here, my assumption is I have my asset cost. It's going to, my asset cost is the 2050, and I'm going to minus my book value to get my accumulated depreciation of 1550. Good. Now, how do I solve for my depreciation expense? What's my,
Number of
say that again?
number of units produced.
Yes, okay, but in this context, we already looked at the numbers of units produced and we multiplied it by the per rate, okay? But we're working backwards now, okay? What determines my accumulated depreciation? What's my formula for accumulated depreciation?
Previous year.
Yes, so here I'm going to write it down here. Accum, okay, is equal to previous years accum, right?
Yep. Plus current years.
Plus current years. Good. Plus I'm going to put depreciation expense. So, if we know we have our accumulated depreciation, right? It is right now 1550, all right? And we know what my previous years was. It's 1329.90. And then I need to add I'm going to add D for depreciation. So tell me, how do I get to 1550 if I know that I have 1329.90? How much do I need to add in order to get to 1550? Or in this case, how do I solve for my current depreciation expense?
So how I get is 220.10.
Uh-huh.
15 minus 1329.90.
Perfect. You're gonna take your 1550 and you're gonna subtract your previous years to get your current depreciation expense. So here, this is what you need to do because it went over capacity. All right. There's also another way that you could have solved this too. If you didn't like working backwards, you could have went forwards. Pretty simple. All you had to do was calculate your total amount of units that you had. And then you would find the difference, which is for this case, let me go ahead and let's go ahead and find the sum of this, okay? So equals sum equals sum all of these numbers, okay? And I get 2550. How much is my capacity? What's my capacity?
25,000.
25,000. So how many units did I actually go over?
50.
You went over by 50 units. So because I went over by 50 units, right, I can assume that if I were to have 50 units remaining, right, if I had 50 units remaining, okay, or sorry, in this case, that's not correct. It would be 3600 minus 50 would be 3550. If I were to multiply that by this unit rate, I would actually get the 250. So if I were to go here and I did the unit rate, I got 22010. Okay, that's if you want to work forwards instead of backwards, because backwards was a lot harder, right? Where if you solve for this one and said that, well, how many units did you go over? I went over 50 units, so therefore I'm going to adjust it because I went way over capacity. So if I made that adjustment, it would have panned out evenly. Okay, so yes, so we got to take a look at working backwards, but we also got to take a look at forwards as well. Okay, so there you go. Good job, everybody. You guys solved for the first one. All right. Any questions in regards to units of production?
How do you count the number of service? How do it came from 7 months the for this one
It's 7 years.
and 7 years?
Be-
It says June 12.
yes, but remember, time is not a factor. It's an amount. It's just the base. It's based on the capacity. If your machine supposedly supposed to last you 7 years, right? So that's why I have 1 through 7. It's supposed to last me 7 years. But if I add all my numbers together, my main goal is that it doesn't matter how old your machine is. If it goes beyond capacity or if it meets its capacity, that's it. It shouldn't be able to produce anymore. So it's like if I bought a printer, right? And its capacity that it can print out 100,000 sheets. And imagine, let's say you printed over 100,000 sheets. Do you think the ink is going to work? Do you think the hinges are going to work? Do you think the paper feeder is going to work after it's been past its lifetime or actually past its capacity? No, you're probably going to have to go maintenance it, right? Go take it to somebody who can fix it because you pushed it beyond its capacity. And yes, and I didn't talk about it in this chapter, but we did talk about that. Yes, you can revalue your assets by adding maintenance or fixtures to your asset. You can extend the life of it, and you can also extend the capacity as well because you made those fixtures. That means you by adding money into your asset again to fix it, then potentially it adds value to your asset, and it allows it to either last longer or it also allows it to be able to produce more stuff. Okay, that's the idea there. But that's the concept that I didn't want to teach you guys. Okay, it's in your readings. So with that being said, because it went beyond capacity, even though it didn't even reach its full potential, right? It still has 5 more months to go, right? But even though it's gone through its life, it's gone through majority of its life. In this case, its life ended a lot shorter, but it still produced 25,000 units. Okay, so in this case, the rule must stand still that you cannot ever fall below salvage value. Okay, book value can never fall below salvage value. So once a salvage value is set, you're gonna at this point in time, what you would actually normally do is you would actually revalue it. Okay, go through that whole process to revalue it. Add those fixtures if you need to. Okay, but like I said, machinery, it's already reaching its end of its life. It's already been 6 years. You don't want to keep pushing it further. Okay. All right. Any other extra questions about units of production? Okay. Let's move on to double declining. Okay. Number 2, you purchase a laptop for $890 with $50 salvage value. Okay, its useful life is 7 years. Okay, wow, that's a long time for a laptop. Okay, and then here you put this laptop into service on January 8th. Use double declining method. All right. So as we can see here, we're assuming that we're doing depreciation at the end of each year. So what did I buy?
Laptop.
You bought a laptop. Good. All right. How much does this laptop cost me?
$890.
$890. Okay. What's my salvage value on it?
50.
50. Good. What's its estimated useful life?
7 years.
7 years. And lastly, what is the date that we placed into service?
January 8th.
January 8th. So what does that mean? When do we depreciate it?
February.
Why February?
I'm sorry, January.
Yes, yes, it's more than 50% of the month. So therefore, we have to depreciate for the month of January. So that means since we're doing a whole year's worth of depreciation, we're safe to go ahead and assume that the first calculation is going to be it. Okay, so let's go ahead and solve for the depreciation basis. What is my depreciation basis?
$890.
Good. It is going to be beginning of the year's book value. So in this case, it's going to be at $890. Good. All right. What's going to be my depreciation rate? How do I solve for my rate?
1 divided by estimated useful life.
Okay. Okay, good. So what is my estimated useful life?
7.
7. 1 divided by 7 times 2. So what is going to be my rate here?
0.142.
Times 2. Times 2.
0.2857.
Good. All right. So good. Now that we have that number, what is going to be my depreciation expense? So this is where I'm going to use my equal round.
So depreciation basis times rate.
Good. Basis times rate.
254.28
$254.29. Good. So then what is my accumulated depreciation?
254.29.
Mm-hmm. Because the previous year, there is no previous year. So your automatic assumption is it's going to be your current years. So now that I have this piece of information, what is going to be my book value.
$635.71.
635.71. All right. And then, so then what is my depreciation basis for year number 2?
635.71.
Correct. It's going to be your end of, so here your book value at the end of year 1 is going to be the 635. That makes it the beginning of the year for year 2. So here, now that we place that number there, what do I know about the rate? What's going to be my rate?
Same.
It's going to be the same. So what I could do safely is I can safely assume that it's going to be the same throughout all 7 years. So what is going to be my depreciation expense for year 2?
181.62.
181 points, round up.
Yes, 63.
Good. Okay. So that, then what is going to be my accumulated depreciation?
435.92.
435.92. And then lastly, what is my book value as of year 2?
454.08.
454.08. Good. All right. That which makes it my book value for year 3. Okay. So then keep moving on forward. What is my depreciation expense for year 3?
129.74.
Good. And then what is my accumulated depreciation for year 3?
565.66.
Good. Making my book value to be
324.34.
good. 324.24. So that makes my book value for year 4. Okay. So again, what is going to be my depreciation expense for year 4?
92.64.
92.60. You might have rounded to earlier. Right? Anybody else? Did you guys get 92.67?
Yes.
Yeah, sorry.
No worries. Okay. What is my accumulated depreciation?
658.33.
658.33, making my book value to be now
231.67.
good. Right? So that makes that my book value for year 5. Okay. So what is my depreciation expense for year 5?
66.90.
Mm-hmm. Making my accumulated depreciation to be
724.52.
74.52. And then lastly, what is going to be my book value?
165.48.
Good. All right. So that means we can keep going because we haven't reached salvage value yet, or nor did we reach the end of its life yet. So here I placed in my 165. So it's okay. Excel can see what I'm doing, but what is going to be my depreciation expense for year 6? 47.28, bringing my accumulated depreciation to be
771.80.
yes. Okay. And then lastly, since I have this number here, okay, actually, I'm just going to expand it. There you go. What is my book value as of year 6?
$118.20.
1820. Good. So I'm going to place that right here, hopefully on the 7th year. Let's see what happens when I place this here on the 7th year. What is my depreciation expense for the 7th year?
3805.57.
Uh,
For the depreciation expense.
It's 3377.
okay, good. Okay. All right. What's my accumulated depreciation? Is that
805.57.
good? And then what's my book value going to be?
84.43.
84.43. So here in this idea, my asset can go a little further. All right. If you'd like, you could go ahead and solve for the 8th year. But again, yes, this can happen, especially. Well, I mean, that's what I'm trying to say. For a laptop, you already know it can last you a long time, but you know how slow it gets. So in this case, let's go ahead and do this for fun real quick. Let's solve for the 8th year and see if we actually pan out to get an even, or if we even reach book value. So in this case, or salvage value, excuse me. So let's go ahead and solve for the 8th year, just potentially what happens here. So what is my depreciation expense for the 8th year?
2412.
2412, making my accumulated depreciation to be
89.69.
89.69, making my book value to be
6031.
6031. So, but also, it's also like common that, as you could see, obviously, as the computer gets, longer in its life, the less you're most likely going to use it. So at this point, it's scrap metal at that point. If it's lasting you 8 years, but let's be real, it's a laptop. It's not going to last you that long. Or even if it does, you could turn it on, but you won't be able to do anything with a laptop if it's that old. So at that point, you can either scrap it for metal, take a loss on it. It's not that big of a loss, right? You're only losing $10 out of it. So with that being said, yes, that is double declining for you. Yeah, any questions for double declining? Okay. No? All right, then let's move on to straight line. Okay, so you purchased a table set for $770 with a $70 salvage value. Okay, its useful life is 7 years, and you put the service on August 21st. Okay, use the straight line method. Now, what did I buy?
Table set.
You bought a table set. Table set. How much did it cost me?
770.
$770. And what's my salvage value on it?
70.
You want it for 70 bucks. Okay. It's a table set. It should last you way longer than that, or be worth way more than that. And what's its useful life?
7 years.
7 years. And lastly, when do we place this into service?
August 21st.
August 21st. So what does that mean? What does this tell us?
Depreciation starts in September.
Depreciation starts in September. Good. And because we're dealing with straight line, it is time sensitive. Okay, so let's go ahead and solve for the depreciation basis. What's my depreciation basis going to be?
700.
Yes, it's going to be your asset cost minus your salvage value, which in this case is 770 minus 70 gives you 700. All right. And what do we know about the 700? What can we assume? Okay, never mind. Okay, it's going to be the same
The same.
for the rest of its years. Yes, because it's straight line. All right. What about the rate? How do you solve for the rate?
One divide useful life.
Mm-hmm.
7.
Mm-hmm.
So 0.14.
Good. And of course, same thing here. We can assume that the rate's going to stay the same as well. Okay? The only thing that we're solving for is going to be depreciation expense. Now, let's go ahead and solve depreciation expense for the first year.
So depreciation basis times rate.
Yes. So equal round here. My depreciation basis times rate, comma, 2. What do we get here?
I get 99.99.
So 100.
Okay, so basically 100, right? Now, question to you. Can we take the full 100 out? How old is my asset right now?
Four months?
It's only 4 months old, right? We're only can depreciate it for September, October, November, and December. So in this case, can we take the full 100 out? You said no. So how much can I take out of the out of the 100?
Be 33 and 0.33 cents.
Yes, because in this case, 4 months out of 12 is 1/3. Okay? So if I can only take 1/3 of 100, which is 33. Okay? So I'm going to go retype this formula again. So equal round this times this times 4 divided by 12, comma 2 should give you $33.33. So what does that make my accumulated depreciation to be?
33.33.
Mm-hmm. And
33.
good. And then, yes. What is my book value going to be for year 1?
736.67.
Good. Okay. So now we can go ahead and depreciate it for the whole year. So as we solved it for before, right? How much was it for the whole year?
100.
It was 100. So let me go ahead and multiply those across, comma 2. It was $100 every single time. So if I know that for a fact, that means what? What does this tell me? That means I gotta depreciate it for 100 for the next 7 years, right? Okay. And then I'm going to So now it's going to be for 100 for the next 7 years. Now let's go ahead and calculate this. What is my accumulated depreciation for the second year?
$133.33.
Mm-hmm. Okay, so excuse me. What is my book value as of year 2?
636.67.
636.67. What's my accumulated depreciation for year 3?
233.32.
Mm-hmm. Making my book value to be
536.67.
536.67. All right. What's my accumulated depreciation for year 4?
333.32.
Mm-hmm. And then if you notice this trend here, you're just adding 100 every single time. So it's going to be 333, then 433, 533, then 633. Okay. And then lastly, my book value, same thing. They're all going to decrease by 100. So it's going to be the next one's going to be 436, then 336, and 236, and then 136. All right. So that's the end of its 7th year. Now, how old is the asset right now?
6 years and 4 months.
It's only 6 years and 4 months. So how many more months do we still have?
8 more.
We have 8 more. So therefore, we can carry on to the next year. Same thing here. Except this time, we can't calculate it for a whole year. We have to divide it by 8 months. So what is 8 out of 12?
66, 67.
66, 67. So what is it? 8 divided by 12 gives you, okay, yeah, let me round that number up. So 60, you said 60,
66.67.
7. All right. And therefore, what is my total accumulated depreciation at the end of the 8th year?
700.
700.
700 even, bringing my book value to be 70. All right, and perfect. Guess what? Everything panned out perfectly because I reached my salvage value. I reached the end of its 7 years life, and here my accumulated depreciation matched my depreciation basis. So good. That's what you have to do. You have to go all the way to the end because with straight line, you can't leave a penny behind at all in this concept. But you can if it means of necessary, right? If you reach your salvage value at 770, you can determine whether are you going to sell it, cost it, or are you going to dispose it, or are you going to add fixtures to keep this machine going. All right. Any questions for straight line? This is the easiest one. All right. Last but not least, we got amortization. On October 10th, you purchase a license for $556. Its useful life is 15 years. So what did I buy?
License.
You bought a license. Right? I think that's how you spell license. What's my asset cost?
556.
556. Do I have a salvage value?
No.
No, you don't, because it is a intangible asset. Okay, make sure you know that. A salvage value does not exist, and I just realized that's 556. There you go. All right, there is no salvage value when it comes to when it comes to owning an intangible asset, right? It doesn't have a residual value because at the end of its life, you're gonna have to renew it. Okay, so it's gonna have a new beginning every year. All right. So useful life.
10 years.
All right. And lastly, when do we place this in service?
October 10.
Yes. The day that you purchase a license is going to be the day that you depreciate it. So in this case, when do we depreciate it? We're depreciating it as of the month of October. So, what's going to be my depreciation basis?
Three months.
Oh, okay. Good. We're going to be depreciating it for 3 months, but what's my depreciation basis?
556.
556, right? It's the same thing as straight line, except there is no salvage value. So with that, I know for straight line assumption that because it's 556, it's going to be 556 for the rest of the way. What about my rate? What's my rate going to be? Correct.
0.06667.
Yes. All right. And of course, with this, we can also assume it's going to stay the same as well. So then what is going to be my depreciation expense for year 1? Yes, depreciation basis times rate.
$37.07.
Okay. Now, that's for the whole year. Can we take 37 and 7 cents off for the first year?
No.
No. Because what? Why?
Because it was only depreciated for 4 months.
October, November, December is 3 months. But yes, you got the idea. That's right. So if we can only depreciate it for 3 months, what is going to be my new depreciation expense? October, November, December is only 3 months. So how much is my depreciation expense for the first year?
I have 9.27 or 26.
Yep, $9.27. So that makes my accumulated depreciation for the first year to be $9.27. So what is going to be my book value?
$546.73.
546.73. Good. All right. So what is my depreciation expense going to be for year 2? This time we're depreciating it for the whole year.
this is where the 3707 comes in.
And because we know this is for the whole year, and we know that straight line is the same, that means it's going to be like this for the rest of its life until you reach the end. Okay? So then what is my accumulated depreciation for the second year?
Forty.
Okay, so then what is my book value for year 2?
509.66.
Good. All right. Three more left. So what is the depreciation, accumulated depreciation for the third year?
83.49.
Making my book value to be
472.59.
good. All right. What is going to be my accumulated depreciation for year 4?
120.48.
120.48. Bringing my book value to be for year 4.
435.52.
435.52. And last but not least, I'm not going to have you do all 15 years. So what is the last one? What is going to be the accumulated depreciation for year 5?
157.55.
157.55, bringing my book value to be as of year 5.
398.45.
398.45. Good. All right. So looking at all these depreciations, okay, so we know amortization is similar, is identical to straight line. We know that units of production, right, it's based on a capacity of units. And then double declining, we know that it's based on using the asset more in the beginning than in its later years. So looking at the all 3 depreciations, okay, it's much easier if you can do this in Excel, because every depending on how the company depreciates, right, you can assume if you can do this all in one go, right, if you can punch in a formula and just click and drag all the way down, it will produce the answers for you. And that's exactly what the accountants do. They don't sit there and calculate it every year. They just go ahead and make a spreadsheet, calculate it all in one go, and then every year or whenever their given end of the period is, they just come back to this worksheet, refer to it, see what the depreciation expense is for that term, or for that end of the period, and they just record it. They don't need to sit there every year just to calculate this, because like I said, it's going to be almost near impossible if you're going to be owning a lot of fixed assets and intangible assets. You're not going to be able to remember every single one, especially if you are looking at different types of methods that you're using. So that's why most commonly for most corporations, they usually will stick to one and make it convenient for themselves, because it's just much easier if you just say, hey, I'm just going to calculate all my depreciation for all my fixed assets as straight line. It just makes it more easier if you could just be able to just take one method and just spread it across, right? That's the one thing about accounting, right? Up to this point, how many methods did we learn, right? We learned the periodic versus perpetual method, right? We learned the net versus gross method. We learned, the direct write-off versus the allowance method. And then we learned the balance sheet versus the income statement method. Every single thing that we're looking at is just showing you the possibilities that you have options when it comes to, analyzing or even understanding how a transaction works. But in reality, the more complicated you make it yourself to be, the more complicated your books are going to get, and whoever your accountant is going to get a headache. All right. And this is actually why they get paid the big bucks for this kind of thing, because it requires so much brain power. It requires too many formulas to remember. It requires too much ideas. So that's why they split the accounting department based on subsections. We have someone in charge of sales. We have someone in charge of accounts payables, accounts receivables. We have someone that does HR, and we have someone who does inventory, right? Because realistically, look at all these concepts that we learned. Can one person truly do all of it? Yes, they can. Is it going to be, is it going to be easy? Absolutely not. It's just much easier if you can, break it down into pieces and facilitate it to other people. So that's why Excel is a huge factor learning in accounting, because it makes calculations a lot more easier. But the only thing is that you have to know that Excel's not going to be perfect, because ultimately, who is punching in all the numbers? The human, okay? So the human can make a lot of errors that make Excel appear to have the errors. So that's why it's very important that you understand the ins and outs of Excel. And the great thing about when we do move into QuickBooks, how much more easier it is to just put in a bill, and you don't have to do any of the work behind it. All right? So this is manual bookkeeping for you. And any questions for depreciation, all right? So when we come back from the exam, we got one more concept left to learn, which is dealing with payroll, all right? And this year, payroll's a big pain in the butt. So other than that, any questions in regards to anything that we learned up to today, as well as any concepts that we've learned in the past? Because right now, we're almost done. Okay? Any questions? So, with that being said, I'm going to go ahead and end the recording. So, again, right now it is